Hi everyone, I'm Ken from Crypto Trading KS. If you're new, welcome, and welcome back to our regular community. Let's run the numbers. Bitcoin currently trading at 32,584, down 2.3%. Ethereum currently trading at 2064 and down 9.6%. We noted the stable coins USDC, DAI, USDT, BUSD. The majority of green. Oh, they're all green now. That means green means money is flowing from crypto into that stable coin. When they go red, it means the opposite. If you just joined the community recently, just like to let you know that everything I do for you is free. The focus is to help you to become more of a financial blessing to yourself and those you love. I don't have any paid groups, reports, indicators, trading links, anything like that. I really show you how to approach trading and investing, noting that all traders and all investors, they're basically symbiotic relationships. When you invest, you need to be able to trade, to enter and exit positions. It's really, really important. I'd like to discuss Rule 220 with you. Live with courage. I developed these rules over the better part of 2 decades of trading. What these rules help me to do is to understand when I make a mistake and what caused the mistake. When we first start trading and first start investing, it's very, very common to feel an enormous amount of fear. 220 is live with courage. But what does that mean? I love this quote from Winston Churchill. He was a former Prime Minister of the United Kingdom and rose to fame in the Second World War. He said, "Fear is a reaction, courage is a decision." So if fear is reactive, courage is all about deciding. It's brilliant. How does that apply to your investing and trading? You can feel fear. And there's so many channels out there, especially on YouTube, but it's not confined to YouTube. It's also in the media, mainstream press. They spread so much fear, uncertainty, and doubt, which is FUD. You may hear that term floating around. FUD is incredibly negative and is designed to make you buy. Maybe you need to buy a list or buy a subscription service or buy an indicator or buy something. People use FUD and FOMO, which is the opposite, fear of missing out, to get you to act. Advertisers in newspapers and online media do exactly the same. We in this community are all about courage. We collect the data, collect the probabilities, and there's nothing to sell on this particular channel. We do this as a community to increase the amount of goodness in society. That's what we're all about. Plato was an incredible philosopher who lived a long, long time ago. He said, "Courage is knowing what not to fear." It's always common for us to have fear as a base level emotion. It really is a basic foundation to human psychology. Courage is all about saying, "I acknowledge that fear, but I'm not going to act on it." That is incredibly important. When you're investing and trading, you will see that there's so much fear out there. What do you want to do? You'll want to sell or you'll want to buy. That's a really, really bad idea. Courage is going against the trend, thinking like an institution, having all the facts behind you. That is what this channel is about. This is a courageous channel filled with an amazingly courageous community. Before we look at any coin, it's incredibly important to uncover the true trend. Rule 1112 is all about a process that's applied to uncover the true trend. If you don't know the trend, you'll get into incredible problems. Rule 181, we must always compare the same psychologies. Compare light to light, darkness to darkness, dawn to dawn. There are so many channels that cross psychologies all the time. All price is psychological by nature, determined by crowd psychology. When people cross psychological states, they actually lead you astray. I developed the KS model, which is a Bitcoin technical trading model based on institutional price psychology. You can see here I've highlighted the white sun. This is bull market psychology for the current phase. The green sun, which is after the 2016 halving, that's the sunlight bull market psychology for that phase. And you can see it down here in the blue sun, the 2012 halving. I just want to point that out because we're going to go through a range of data and we're going to look for those particular cycles. Let's have a look at some on-chain data. Bitcoin realized cap hodl waves. The current cycle is in this blue rectangle. The past peak from the green sun 2016 is in here. From the blue sun 2012 halving onwards is here. We notice this little red spike here. That's like this one. You remember there's two more to go here. From past episodes we've talked about this a lot. This is like the first wave. There's another one and another one. We've got a long way to go. We're just getting started. Let's have a look at more on-chain data. This is the Bitcoin hash ribbon. You notice this circle in the current time period. You know that that's the green sun here, and this is the bull market action psychology. We're always looking for psychological comparison. You notice this area of red. The closest that we can get is down here for the previous cycle, the 2016 cycle. Going back to the 2012 cycle, the blue sun, the closest we can get is here. What does this mean to you? When you look at this data, how do you interpret it? It means we have a long way to go. If we were in a bear market, as some commentators say that we are, and everybody's entitled to their view of the data, and whatever people say, you just look at the probabilities and say if they're correct or not. We notice that from a peak, look at all this white space. You see all that white space there? From the peak, all this white space. This red occurs way down in what's called capitulation. See here and here, this is the end of the bull market. Oh, and end of the bear market, sorry. When you look at this, we are in the bull market. It's just realistically started. We would expect, if this was a bear market, the red can't be there. It's never been there. Okay, so let's continue. We're just assuming probabilities and collecting them. Let's turn to net unrealized profit and loss, NUPL. We're really seeking out euphoria. Euphoria always accompanies Bitcoin rallies to the top because that's exactly what institutions create. It's quite normal in this kind of market. Exponential markets always have euphoria, and Bitcoin is an exponential asset. We look to the green sun 2016 euphoria. We look back to the blue sun 2012, two peaks of euphoria. Where's the euphoria in the current 2012 white sun cycle? It's not there. Again, another probability. We got a long way to go. Let's have a look at reserve risk. You notice in that past cycle, the green 2016 sun, we got up into this red band. I always say you don't need to have built the car to drive the car. It's a really good understanding. Looking back to the 2012 cycle, the piercing of this red band came in. Where are we in the current cycle? We're all the way down here near the green band. That signifies there's a lot of room to run in this current bull market. Let's have a look at some more on-chain data. We can see the previous peak in the 2016 cycle, the green sun, is up here. We notice this Puel multiple is actually piercing that red. This is the Puel multiple here, this orange line. We can see going back to the 2012 cycle, there were two peaks, peak 1 and peak 2. The second peak was the top. We can see it's going in to this red area. Now, where is the red area? Oh, okay, it's not there. So where is it close to? It's close to the green area. We've got a long way to go. Let's have a look at stock to flow deflection. When we look around the current price of Bitcoin, we see the stock to flow deflection is way down here in the green. Has it ever been there before? The answer is no. That already gives us confidence that we're not peaking. But why is that? Because when markets peak, for example, here, the peak of the 2016 green sun, it went red. You see this red here. Going back to the 2012, the peak of the red occurred here and here. We're in the green. We're a long way away from that red zone. Let's have a look at Rule 193. Check the stock markets. Now, why do we do this? We're not even interested in the stock markets in crypto. But that's where Rule 193 is really, really important. We must check them. A failure to look is a failure to manage your portfolio. It's really, really important. I wanted to share with you that the US market accounts for around 56% of all stock market value throughout the world. The next is Japan on 7.4%, China on 5.4%, and the UK at 4.1%. That means the US market leads the world. I've included a link here for you if you'd like to see that chart. A lot of people, when they're new to trading and investing, feel the price always goes up, and if it comes down, it's a crash. Peter Lynch was an incredible investor, an amazing person, and a really funny guy. He said far more money has been lost by investors preparing for corrections or trying to anticipate corrections than has been lost in corrections themselves. That's a really, really important thing to understand. If you are preparing or anticipating a correction, you're losing money. Let's go in and see how the markets are performing. I share this analysis so you can be really aware and fight the FUD that's coming. There's going to be a lot of FUD coming. I need to protect you from it. NASDAQ 100 US stock market, we know it's a big market. It really literally controls other markets around the world. We've had a sustained uptrend in price. Regular viewers to this community, what do we know? Price moves in waves. It's always moving up and down, up and down, up and down, up. And of course it's going to move down. And when it does move down, it's going to be the end of the world. Market crash, market heading to zero, NASDAQ heading to zero. You're going to hear it all. But you know what? We just keep our eye on this line. And we know that everything moves in a wave. We're not concerned. Natural price action. S&P 500. We've got this uptrend. Things are holding. No problem. Technically healthy. We look at the Russell. The Russell has come down a bit. Now, why would that be the case? Because it went through a really big move, and big moves always need to consolidate. It's really important that you understand that consolidation phase. The Dow Jones is moving up, kind of like the Russell. It's showing a little bit of weakness, but it's not the end of the world. Let's go into all the crypto-related stocks or trusts or funds or ETFs. So GBTC, Grayscale Bitcoin Trust. We can see it's got to get above this resistance, but it's looking pretty healthy at the moment. No cause for concern. There's been a lot of discussion about the release in the Grayscale Bitcoin Trust. I want to show you something really cool. This is a chart from Bybit.com/Grayscale. You see this trust unlock? Everybody's talking about this trust unlock as though it's the end of the world. But what about these ones? What about all of these ones? My goodness. People just talk about news to get, I'm sure, readership and viewership, but it doesn't help your ship of financial security. Keep it really stable. Understand the context of these markets. I hope this helps. In episode 112, we actually went through the Grayscale Bitcoin Trust. You need to be exceptionally wealthy to even get in to that trust. Have a look at episode 112. If you haven't looked already, it will give you some really, really good information, always from the source. Let's continue our analysis. This is the Bitcoin fund from Canada. Again, it's really matching the price of Bitcoin at the moment. What's Coinbase doing right now? It's had a resistance level that it has turned to support. It's looking good. This is showing signs of recovery. What about ARK Innovation? Ooh, we're seeing the same thing. So over that resistance, good up channel of support, not bad. Notice this sell-off. This sell-off is for a reason I'll get to later. Galaxy Digital, what's happening here? Resistance, starting to go. Yeah, starting to get there. Let's have a look at MicroStrategy. MicroStrategy, it passed this resistance, turned to support, and now it's going up. This kind of analysis really helps you to understand what's going on. Riot Blockchain. Thank you, DJ, for recommending that we look at Riot. So this channel of support, up and down, price moving in a wave, always moving in a wave. Try not to get freaked out by price moving in a wave. It's really important concept. Another one from DJ, Marathon Digital. I love covering the things that the community wants me to cover. I really exist for you guys. Just let me know what is helpful to you and I'll do my best to include it. I can't include everything, but I'll certainly do my best. See this up channel of support? It's wavering, price moving in a wave. Mara is looking good. Let's have a look at Hive. Thank you, Jason, for calling out Hive to look at. We can see this resistance now turn to support. There's been a bit of sell-off, but there's a reason for that. We really cover everything. Jason also recommended Bitfarms, so let's have a peep at that. You see this support? That's still holding. There's a resistance line above, but hey, let's see what happens. All looking pretty good overall. R. Walters, thank you, R, for recommending Argo blockchain. We can see this resistance down here. We can see it consolidating like this. This is a very, very good sign. We're always checking all aspects of the market. Let's have a look at gold spot. We see this previous resistance, then turn to support, then turn to resistance. It's still at resistance. I guess one thing interesting to let you know, when gold tends to rally, it tends to rally as a safe haven. Just bear that in mind. Let's have a look at silver. We can see silver. You notice the Bitcoin price in the background. I pop it in here so that you can really understand what is happening in crypto. We look at that support trend line. There's quite a bit of strength under here. Silver's looking quite good. I'll talk a little bit more about all the FOMC meeting minutes and what have you a little bit later. We look at the VIX, which measures volatility spikes. Volatility comes in when people are unsure of what is going on. I used to trade the VIX. It's a really fun instrument. Let's have a look at the DXY, which is the US dollar currency index. It's representative of how the US dollar is moving against 24 countries and these particular currencies. We can see this level of resistance playing through here was broken, turned to support, and this milder level of resistance here. The dollar has hit resistance and backed off, which is really quite common. That's what resistance does. Let's have a look at the CBOE 10-year Treasury note yield. We noticed that it broke down past this level of support here. There's been a lot of analysis in the market as to why this may have happened. The best possible thing that I have heard was that what was actually happening when the minutes were released, the actual meeting happened 3 weeks ago around here. Traders started shorting, expecting a lot of different factors that didn't actually get reflected in the minutes. So they were shorting down, and it appears that they're covering now. This will probably be a spike down and a spike up. We have to see how it's going, but that's the best example, the best illustration I've heard that makes the most sense to me. So the market was expecting lowered money printing, a degree of tightening, but that didn't happen. They were expecting possibly the concept of sustained inflation. That didn't happen. Depressed economic forecast. That kind of happened because, as we looked in the last episode, that episode is 102 that we look through quite in detail at the Fed meeting minutes. Shorts do the opposite of longs. Shorts sell first and lock in their profits by buying back. I think what we're going to see is an uptick here. This is simply an unwinding of short positions. From what I can tell in the market, we'll just keep our eye on things. We just quickly look to the 30-year. We can see the same thing happening, not quite as much of a sell-off there. I think it's basically a covering of short positions. Let's have a quick look at the TLT. We've seen it rally over this resistance, but again, I really feel it's that short position in yields. We can have a quick look at the IEF, which is the 7 to 10 year Treasury bond ETF. We see it coming up. It's broken across resistance. We always need to keep everything in mind. I think it's just coming back to that short idea. It's really good to keep our eye on defensive sectors like utilities. Utility is in an upward trend. It hasn't broken through this resistance yet. If it breaks through, there could be potential warning signs, or it could just be rotation. We need to really make sure that we cover off all the probabilities. But again, this looks pretty healthy. Let's have a look at oil. Oil continues its uptrend. Let's have a look at Brent oil. Again, continues its uptrend. Overall, everything is looking fine in the markets. I reached out earlier on Twitter and I asked, what's worrying you with Bitcoin today? And I had so many very cool responses. I wanted to let you know about Elizabeth Warren giving the SEC a deadline about crypto and the role of the Securities Exchange Commission in regulating cryptocurrency. I want to share a very interesting statistic with you. It's this particular one. Do you notice the 10-year return on Bitcoin is 230,901%, as opposed to the S&P 500 at 228% and gold at 16%. Basically, Bitcoin is growing on average over the past 10 years at 117% per annum. S&P growing at about 13% per annum. How much luck do you think Elizabeth Warren is going to have on regulating crypto? Just when you understand that these gains are on the table and the people with money are not going to go too lightly and say, yeah, sure, Elizabeth, whatever you want. It's not going to happen. I'd like to share something else with you. This is the technological adoption curve of, in the beginning, internet compared to crypto. I had an internet service provider where I actually serviced internet clients. They used dial-up modems and they called into my system right here at the start of 1993. I've been involved with discontinuous innovation for a very, very long time. All the regulators came out because it threatened the telecommunication sector. And the telecom sector said, we're going to time local calls. Now, that's not going to make a lot of sense to people until they understand that modems used to dial into these internet service providers. I was back in the day of 2400 baud modems, which is like ancient. I'm kind of like a dinosaur. It's an amazing thing. But what the telecom industry did was to try to stop the internet. And guess what? It didn't succeed. It also might be really hard to imagine that the predominant form of transportation before the 1900s was the horse and buggy. This thing. Look at it. It's amazing. Do you know, why don't we still have horse and buggies as the predominant means of transportation? Do you know this is Fifth Avenue in New York City? Look at all these horse and buggies. It's incredible. When the motor vehicle came out, The regulators of the horse and buggy industry wanted to put a stop to these newfangled motor vehicles. They called them electric horses. It's so bizarre. But, you know, how much success did they have? Absolutely none. Why? Because cars were more effective and more efficient. The real key to understand is this. When big investors look at these kind of returns, Bitcoin year on year growing nearly 120%, the gains from such investments mean that it cannot be banned. And if it is banned, the investors will just move to different countries. I'd just like to do a quick shout out to Joe. Joe recommended that I have a look at Fidelity. This is a really cool, just search business cycle update Fidelity and you'll get this URL. What this chart is showing us is the major economies are coming out of recovery and they're not even at expansion. You see the recession here? This is contraction. We're so far away from contraction, but everybody would have you believe it's all over. I'd like to give you an idea of how fast crypto can repair itself. This is Axie Infinity, AXS. Look at this. When it traded over this resistance, turned it into support, it just took off. This is what we can expect from crypto. Crypto is an exponential asset. It's not linear. It jumps around a lot. When the repair comes, it's going to be like this. A lot of people reach out to me and say, Ken, is it the top? Is it the bottom? Rule 56, we never seek tops or bottoms because we only know they've occurred when they've passed. Right now, there's a lot of fear in the market. That's an ideal time to accumulate. We think like institutions. We do not think like retail investors on this particular channel. Just keep on dollar cost averaging, buy in layers, always know price moves in a wave, and you're fine. That's really what we do, collect the data to make sure that we're heading in the right direction. You know the stock markets may retrace? Absolutely, price moves in a wave. It's not the end of the world. We're seeing the developed countries are on the start of their recovery process. Recession is a long, long way away. Hopefully this data has helped you out. I hope you found this content useful. Everything I do for you is free. Please be aware of scammers. I do these videos to assist you to be more of a financial blessing to yourself and those you love. Please say hi and let me know where you're viewing from. And if you have any questions, I'm always available on Twitter under direct message, or you can just use my @ and just send a comment to me. I love hearing from the community. If you would like twice daily updates, 7 days a week on price movements in the crypto market, please subscribe to YouTube and follow me on Twitter. Crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, take care, and see you next time. Bye for now.